Since July 2018, after the ILNF's bankruptcy, automobile sales in India started declining. And from July 2018, it's been August 2019. And today, the Society of Indian Automobile Manufacturers released the wholesale dispatches. That means how much each and every auto company in this country has manufactured and dispatched their vehicles to the dealers. Now, going by that data, again, in this July, passenger vehicle sales have declined by 31%. To be precise, the decline is 30.9%. This is the sharpest fall in passenger vehicle sales since December 2000. Now, I'll quickly take you through the data. Passenger vehicle sales declined by 30.9% on the back of 15.2% decline in utility vehicle sales, whereas sales of passenger cars like Maruti Swift or a Hyundai Grand i10 declined by 35.9%. When it comes to commercial vehicles, the decline is again 37.4%, whereas in two-wheelers, that is scooters and motorcycles, the decline is 12% and motorcycles declined by 18%. So what is the consequence of this precipitous fall in automobile sales? We know that the automobile sector contributes 49% of the manufacturing GDP, more than 7% of the overall GDP of this country. Automobile companies actually buy their steel from steel companies from like Tata Steel, JSW and others. They work with the chemical companies, they work with textile companies. Hence, a slowdown in auto sector actually impacts the broader economy. What is the consequence of such decline in auto sales? Manufacturing companies like Maruti Suzuki, Mahindra and Mahindra, Tata Motors and others have cut down on their overall workforce in their manufacturing plants. How does it work? Manufacturing companies, because of the cyclical nature of their business, they hire 70% of their total workforce as contractual laborers. Now, whenever there is a slowdown, it is the contractual laborers who's been asked to go. According to a Mint report, almost 40 to 50,000 contractual workers in the Gurgaon Manesar manufacturing belt have been asked to go. So that means that almost 50,000 people or even more have been rendered jobless because of this slowdown in automobile sales. Now I'll take you through the reasons for this decline. Now we all know this decline started from the point when the Infrastructure Leasing and Financial Services Company, ILNFS, declared bankruptcy. Now when ILNFS declared bankruptcy, the banks becomes extremely cautious of non-banking finance companies. Now why are non-banking finance companies important? The non-banking finance companies actually offer finance options to customers in the rural areas where banks don't have a reach. In heavy-duty trucks and bus sales, non-banking financial companies actually have more exposure than the private and state-run banks. As a consequence of the liquidity crisis, banks did not have enough funds, or banks did not want to extend credit to the NBFCs. The NBFCs, on the other hand, or rather consequently, could not deliver credit or could not extend credit to the end customers. As a result, there was a sharp slowdown since finance options are extremely crucial for auto sales. Now I'll take you to another aspect of the slowdown. As a result of the credit liquidity crunch, fleet owners, the ones who buy trucks and buses, they could not buy new trucks. On the passenger vehicle front as well, the NBFCs had more than 10% share, and that's a very significant number. Companies like Maruti Suzuki, which has enough exposure in the rural markets, depend on these NBFCs to offer credit options to their customers. As NBFCs could not extend credit to their customers, passenger vehicle sales and commercial vehicle sales actually slowed down. Now I'll take you to another aspect of the auto slowdown. Now, IL&FS crisis created a shortage of credit from the financial institutions like banks and non-banking financial companies. Then there were regulatory challenges, or rather regulatory headwinds for the auto companies. First, let's delve deep into the issues that impacted the two-wheeler sales. Now I will take you to a very different aspect of the slowdown. The Supreme Court mandated that third-party insurance premiums will have to be increased. Now with the increase in third-party insurance premiums, the cost of ownership of a vehicle increased. Hence, customers shied away from owning a vehicle. Then again, the axle load norms of heavy commercial vehicles. Now what are axle load norms? Freight carrying ability of a commercial vehicle was increased by almost 15 to 20%. Hence, the fleet owners who were running 25 vehicles right now did not need to go and purchase additional vehicles, which means that every commercial vehicle can carry more load than what they used to. Hence, there was a slowdown in the commercial vehicle sales. When it comes to passenger vehicles, now we all know from April next year, the BS6 emission norms will be introduced. What does that mean? That means that BS4 vehicles, if someone buys one, it will not give them a decent return when the person will want to sell his or her vehicle 5 or 6 years down the line. Hence, the customers, well informed about these changes in the market, is actually shying away from buying vehicles. Now, apart from the overall consumption slowdown in the market, these regulatory changes have also impacted auto sales. Now, the auto industry is one of the most important sectors when it comes to contribution to the economy. As I mentioned before, it contributes more than 7% of the gross domestic product or the GDP of this country. Now, the government has taken note of this crisis, though it has maintained a stand that this is a transient phase for the industry, and as the auto industry has done in the past, sales will again pick up and the industry will recover. Though from different government sources, we have learnt that the union government is trying to somehow help the auto industry so that the sales revive. According to SIAM and other lobby bodies, a possible GST cut would help revive auto sales. In the future, since the festive season this time will start around August, according to industry bodies like SIAM, a GST cut will actually help revive auto sales. Since the base rate is at 28% and SIAM wants the base rate to be around 18% for all category of vehicles.